Hi guys, today I'm going to be talking about investing concepts. And I think investing concepts are really important because it justifies not just what to invest in, but also why you invest in certain commodities. And in this slide, I'm going to be sharing with you three different investing concepts that are quite commonly used. So the first concept is ESG investing. ESG refers to environmental, social, and governance. So, for the environmental aspect of it, you'd be looking at data regarding the climate, the pollution, and the sustainability. For the social aspect, you'd be looking more at the human factor, so the workers, the community, and the diversity. And for governance, you'd be looking at the management of the company, so leadership, transparency, and the company's ethics. So here I have an example of two companies. Company A, which is highly profitable, but it pollutes, and Company B, which is sustainable, but shows slower signs of growth. So ESG investors tend to prefer Company B because it is still a growing company, even though at a slower rate, but most importantly, it is sustainable for the environment, which checks off the environmental criteria of ESG. So, why does ESG investing matter? It is because companies face real world risks, consumers prefer responsible brands, and governments push for sustainability. So, companies that are compliant with ESG values or principles tend to have long term resilience because it reduces both legal risk and reputation risk, which can arise from, let's say, a company being sued. So, a second concept is Sharia investing. So, Sharia investing is quite popular in Malaysia. It is based on Islamic principles and it focuses on ethical business. It is focused on being fair and the transparency of the company. So some examples of Sharia investing is Sharia compliant equities or shares. A fun fact is roughly 70 to 80% of the listed companies in Malaysia are actually Sharia compliant. So some other examples could include the Islamic Unit Trust Sukuk, which is a Sharia compliant bond or certificate which shows uh, ownership in assets. Islamic REITs, which are real estate investment trusts, and Islamic ETFs. So some key principles of Sharia investing is that the company is prohibited from earning a high interest. It is prohibited from being involved in gambling or non-halal activities. So what is allowed is real economic activity and also asset-backed investments. So a third concept is impact investing. Impact investing is investing with the intention to generate financial returns and to create measurable positive impact. So some examples of impact investing is investing in renewable energy projects, affordable housing, education initiatives, and healthcare access. So for impact investing, it requires metrics or numbers or results. So for example, you would have to look at the data for the tons of CO2 reduced, the number of people helped, or the number of jobs created. And impact investors tend to focus on areas such as green technology, social enterprises, and sustainable infrastructure. So, all in all, impact investing is investing in companies that will benefit the future. Obviously, there are many more concepts out there that investors follow, and I think these investment concepts largely depend on the investor's principles and values. It is mainly just investing in companies that suit your principles and values and that you are comfortable investing in, which can guide your investments. So, yeah, that's it. That's the end. Thanks for listening.